Hi, everyone. My name is Mike Alexander. I am with ABM Insurance and Benefit Services, as well as ABM 360 Solutions, your complete business solutions provider. Today, we have a webinar regarding the top compliance issues for 2018, specifically the 6055 reporting, repeal of the individual mandate, and changes in the funding of the health savings account for 2018. Again, my name is Mike Alexander. I am a licensed employee benefits specialist. Our agency provides compliance and cost-effective solutions to employers of all sizes. We offer a variety of a la carte services, and if you have a need for any of the services that we provide, please don't hesitate to give us a call or contact us at abm360solutions.com or 1-800-362-2809. With that, I'll go ahead and start the webinar, and again, please contact us if you have any questions.
Hello, everyone, and welcome to today's webinar. Our topic for today is top compliance issues for 2018. My name is Erica Storm. I'll primarily be moderating our session today. Our two presenters are Becca Rollison and Erin Marjorie, who are both legal content attorneys here at Xywave. We're doing things a little bit differently today, or this month, this year. For those of you who have sat in on our compliance webinars before, we are doing a combined webinar for some of our Xywave partners, so brokers that work with us, maybe some brokers who don't work with us yet, and also some employer groups. So we do have a very large group of people on the line, and we'll kind of explain how that's going to work with some of the Q&A and things like that. Also, we are going to try to cover a lot of information about these top compliance issues for this year in a shorter amount of time. We know that everybody doesn't necessarily have an hour and a half or more to sit and listen to a lot of legal detail. So we are going to try to cover a lot of topics with a little bit of information about all of them today. We thought that would be a really good way to kick off the year, to just get everybody up to speed on a lot of different topics that you might not have heard about or might have flown under the radar a little bit, because there has been so much going on lately with compliance and regulatory changes. So before we get started, I'll just share a little bit of information about the presenters for today. Becca and Erin, and I as well, we're all attorneys in the employment and employee benefits areas. So we spend a lot of time monitoring and learning about, writing about employee benefit plan compliance, employment law issues, and things related specifically to health plans. And a couple of the things that we do in our day-to-day are to help create compliance resources for employers and also help educate our broker partners and their employer clients on compliance issues. So with that, we are going to kick things off as we want to make sure that we can get to all of our great topics for today. So I'm going to turn things over to Becca, and we are going to start talking about, of course, a hot issue right now for many employers, ACA reporting under Section 6055 and Section 6056.
Okay, thank you, Erica. So as you can see here, there are two reporting provisions that are related in a lot of ways, and a lot of the rules are the same for both of these reporting sections. But it is important to keep in mind that these are two separate reporting provisions, and they do have some very separate rules that apply in some cases. So Section 6055 applies to all entities that provide minimum essential coverage, and that generally includes entities like health insurance carriers and self-funded plan sponsors. And then Section 6056 applies to applicable large employers, and those are the employers who are subject to the employer shared responsibility rules. And both of these provisions are really very similar in what they require. So under these rules, reporting entities are required to report certain information about the health coverage that they offered in the prior year. They'll have to file an annual information return with the IRS, and they also have to provide related statements to individuals. And you can see here that under Section 6055, we generally use the B forms, so it's 1094B and 1095B. And then under Section 6056, we use the C form, so 1094C and 1095C. However, you can see this note on the bottom of the slide here If the self-funded plan sponsor is also an applicable large employer, then they'll have to report under both Section 6055 and Section 6056. So they're going to use a combined reporting method where they'll use Forms 1094C and 1095C to do that instead of the forms that we have listed here. So they're going to use the C forms instead of those B forms. Now these reporting requirements really serve multiple purposes. So first, it helps the IRS enforce and administer the ACA's employer and individual mandates. And then both the IRS and individuals also need this information in order to determine whether that individual is able to get a premium tax credit for their exchange coverage, and then also so that the individual can show that they've complied with the individual mandate. So they actually had coverage for the year, so they don't have to pay that individual mandate penalty. Now, just like most other tax forms, this reporting is filed early in the following calendar year related back to what happened during that year. So that means that employers have to file in early 2018 regarding information related to their 2017 coverage. Now, the individual statements are generally due by January 31st of the following year. However, for 2017, the IRS did extend that due date to March 2nd of 2018. So employers have 30 extra days to provide those individual statements for 2017. And then the IRS returns are generally due by February 28th of the following year. Although if you're filing electronically, the electronic IRS returns are due by March 31st. But for 2017, that electronic filing deadline is pushed back to April 2nd, since March 31st is a Saturday. And there are some deadline extensions that may be available under certain circumstances, as well as a waiver of the requirement to file electronically. Now, looking specifically at Section 6055, these are the reporting requirements that apply to coverage providers, and that includes basically any entity that provides minimum essential coverage to an individual. So for insured plans, the health insurance issuer is responsible for doing that reporting, and that's not the employer who's going to do that. However, for self-insured group health plans, the plan sponsor is responsible for doing that reporting. One big question that we get is, what is minimum essential coverage? And the definition of that is really very broad. So it includes employer-sponsored coverage, whether it's insured or self-insured. And that'll also include both COBRA and retiree plan coverage. And then individual plans are also considered minimum essential coverage, and that includes policies that are purchased through an exchange or marketplace. So really what we're looking at here is the type of coverage that an individual would have to have in order to comply with the individual mandate. However, minimum essential coverage doesn't include coverage that qualifies as accepted benefits. And then also one key thing to note is that generally supplemental coverage doesn't have to be reported as minimum essential coverage. So that includes things like most HRAs, HSAs are also excluded, and then coverage at on-site medical clinics also doesn't have to be reported as minimum essential coverage. Moving on to the Section 6056 reporting requirements, this applies to all employers who are considered applicable large employers for purposes of the ACA's employer shared responsibility rules. So those are those pay-or-play rules. So for purposes of the Section 6056 reporting requirements, we're using the exact same definition that's used for those pay-or-play rules. Now, applicable large employers are employers that employed an average of at least 50 full-time employees, including full-time equivalent employees, during the prior calendar year. And how it works is that we'll determine our applicable large employer status for each calendar year by looking back at our employees' hours of service in the prior calendar year. Now, when we're counting our full-time employees, the pay-or-play rules define a full-time employee as one who's employed on average at least 30 hours of service per week. And the monthly equivalent of that is 130 hours in a calendar month. One thing to remember is that for purposes of determining our applicable large employer status, full-time employees include full-time equivalent employees. So we have to take into account hours of service for our part-time employees and kind of determine how many full-time employees that'll work out to be. So when we're looking at those employees, we calculate that for each month by taking all of the hours of service for part-time employees, but we only have to credit up to 120 hours per employee for each month. And then we divide that aggregate number of hours by 120. So once we run that calculation, the resulting number is our number of full-time equivalent employees for that month. So then we'd need to add the full-time and full-time equivalent employees together for each month to determine whether we're over that 50 employee threshold. Now this is a slide that I think can be very helpful to answer a lot of the questions that we get, because a lot of them are usually based on, this is the type of employer that we are, this is the type of plan that we have, what reporting rules do we have to follow, or which forms do we have to fill out. So this chart basically explains which forms you'll have to complete depending on your employer size and your type of plan. In this first column, we have the easiest situation, so a small employer that has an insured plan or no plan at all, and they really have no reporting obligations because the insurance carrier will do the Section 6055 reporting for the insured plan, and then Section 6056 just doesn't apply to their situation since they aren't considered an applicable large employer. Now, if a small employer sponsors a self-insured plan, they're subject to Section 6055. So in that case, they would have to complete those B forms. And those forms include information about the individuals who had coverage under the plan. So basically, anyone who is enrolled for any part of the year. Now, applicable large employers in all cases will at least be subject to Section 6056, and that's even if they don't offer any health plan at all. So they'll complete the C forms. Those forms include information about the coverage that they offered or didn't offer to each of their full-time employees. And that's included in parts 1 and 2 of Form 1095-C. Applicable large employers that sponsor self-insured plans, though, are going to be responsible for reporting under both Section 6055 and Section 6056. So they'll also use the C forms, but they'll have to include both information about the coverage that they offered to each full-time employee and information about who was covered under that self-insured plan. So part 3 of the Form 1095-C is the part that includes information about those who are covered under the plan. So that means that those employers will have to complete all parts of that form, parts 1, 2, and 3. Next, we're going to take a look at a recent development, and that's the elimination of the individual mandate penalty. So I'm sure you're all aware that Congress just recently enacted a new tax reform law, and that's called the Tax Cuts and Jobs Act. This law includes a provision that reduces the ACA's individual mandate penalty all the way down to 0, effective beginning in 2019. So that means that starting in 2019, individuals will no longer be penalized for not having acceptable health insurance coverage, so that individual mandate penalty will be effectively repealed. However, it is important to keep in mind that this repeal doesn't take effect until 2019, I'm sorry. Therefore, individuals are still required to comply with that individual mandate or pay a penalty for both 2017 and 2018. So penalties can still apply for these years before that penalty is officially eliminated in 2019. The next topic that we're going to talk about is another recent development, and that's related to the pay-or-play penalties. So the IRS has now finally started procedures for enforcing those pay-or-play penalties. Up until now, the IRS has really been behind and is now trying to catch up a little bit on implementing procedures to actually enforce and assess these penalties. So prior to this year, no pay-or-play penalties had been assessed for any employers. However, back in November, the IRS announced that they are beginning to issue letters to employers informing them of their potential liabilities for that pay-or-play penalty for the first year that these rules were effective, so for the 2015 calendar year. Now to do this, they're using a new form called Letter 226J, and this letter is just to inform the employer that at least one of its full-time employees received an exchange subsidy for that year. So the IRS believes that the employer is subject to a pay or play penalty. Now, this is separate from the Section 1411 certification that's sent by the exchanges. Those letters don't assess any penalties. They just inform employers of an employee's eligibility for an exchange subsidy. So the letter 226J actually itemizes those penalties that the IRS believes the employer is going to owe under those pay or play rules. And employers do have the opportunity to respond to letter 226J to appeal that penalty assessment. So if the employer doesn't think that a penalty should apply and they can provide documentation or evidence as to why, then it can appeal that penalty assessment with the IRS. However, if after the appeal, the IRS still determines that a penalty is owed, then they're going to send notice CP 220J, and that's a notice in demand for payment. So that notice is going to provide information for the employer on how to actually pay the penalties that the employer ultimately owes.
Okay, our next compliance topic for 2018 deals with an increasingly popular type of medical savings account, and that is the health savings account, or the HSA. So each year, the IRS announces how much individuals can contribute to their HSA for that year. And it's really important for individuals to comply with these limits. If they go over the limits, then they have to pay income tax on those excess contributions, and there could be an excise tax involved too. And this slide shows the limits that were in effect for 2017 and for 2018. So you'll see that the limit that would apply depends on the type of health coverage. Health coverage under the type of health plan that's offered with an HSA, that's called a high deductible health plan, or an HDHP. So you'll see that both the limits for self-only coverage and family coverage went up. The catch-up contribution limit, which is another contribution that people who are age 55 and older can make, has stayed at $1,000. That actually doesn't change from year to year. So I won't go through these numbers, but employers who are communicating these limits to employees should just make sure that they made the updates for 2018. Okay, so those high deductible health plans that are offered with HSAs, those are also subject to annual adjustments for inflation. To be HSA eligible, an individual must be covered by an HDHP, and that health plan has to meet certain cost-sharing limits. So there is a minimum deductible requirement for these health plans, and also a maximum out-of-pocket. And the limit that applies depends on whether it's self-only coverage or family coverage. This slide lists the limits for 2017 and also 2018. So you can see all the limits are changing. And employers with high deductible health plans will want to look at their plan design before their plan year that starts in 2018. Or for employers that have already started their 2018 year, they can look back and just confirm that the numbers line up, that they're consistent with these limits.
So that concludes the webinar on the information that we presented, top compliance issues for 2018. Hope you found it informative. And again, if you have any questions regarding any of this information, or if we can assist you with answering any questions you might have regarding the services that we provide, please don't hesitate to give us a call. My name is Mike Alexander, and our number is 1-800-362-2809. You can also reach us at www.abm360solutions.com. Thank you, and I hope you have a fantastic 2018.